cash flows are nothing but cash inflow and outflow. Now what is cash? Cash is nothing but cash in hand and cash at bank. Understood? Now thereafter, the meaning of cash equivalent. What do you mean by cash equivalent? Cash equivalents are those items which can be convertible into readily amount of cash within a short period. That short period we understood as less than 3 months. Less than 3 months. Now, one more thing. It has to satisfy one condition that should not reduce its value or should not increase its value in a significant way. In a significant way. So that is the meaning of cash equivalent. Cash equivalent. Now, there are 3 kinds of finance. So what are operating activities? Operating activities are those activities which can be considered as a principal business activities for any business. Now, how can you say one activity is a principal or not? Suppose if I sell goods, buying and selling of goods are what? My principal item. See, there is one more additional definition is given, or else rather meaning is given. Meaning is given. Get it from the back date. The other definition, or else day-to-day activities of the business is also called as what? Operating activities. Now, coming to the next one, investment activity. Investment activities are those activities which are related to purchase or sale of an asset, or else the activities which are related to the resources of the organization. Which are related to the what? Resources of the organization. Next activity is known as financing activity. The activity which is, or as the activities which are related to the change in the financial structure of a company. Change in the financial structure of a company. Suppose, example, issue of shares. Suppose if one company is already having 10,000 shares issued already. Now furtherly it wants to issue 1,000 shares. Now by issuing shares, it gets the money from the shareholders. Or else it wants to issue the debentures. Now by issuing debentures, it gets the what? Money. So here we are going to focus on change in the financial structure. Change in what? Financial structure. So these are 3 activities we already discussed. Now the next one is going to be the next concept. The two methods of cash flow statements preparation. There are 2 methods to prepare what? Cash flow statement preparation. The first one direct method, second one indirect method. As per AS3 of India and IAS 7 prefers direct method, but we learned that in our syllabus only indirect method will be tested for you. Why? Because operating activities only can be calculated by giving with the profit before tax. You need to adjust few things. Reversal of 2 things. What are those? First, reverse all the non-cash items. Right? They deducted means here add. There means here in the profit and loss account it is deducted means here you should add. Thereafter, now reversal of other activities which are entered into the other activities like investment activities and finance. Right? So we should reverse these both things and we are going to get the cash flows. Now, because why we follow indirect method means already in investment activities and financing activities, direct method. Now, if you are going with the direct method, there is no use. So, by giving indirect method question in the examination, examiner wants to test your knowledge. What's your understanding over solving when you are given with PBT to convert into cash flows. So, it's indirectly given so that you are going to get the ultimate adjustment. After doing ultimate adjustment, you will be getting what? Cash flows from operating activities. Now, investment activities, financing activities, anyway, direct. Fine. So, these are the methods of cash. So, we finished. We solved 2 problems also, right? So,
from the viewpoint of examination, more than sufficient. So you go through the extra questions so that you can develop conceptual clarity even more by solving more and more. Is this sufficient?